Hey, Andrew here from The Investor's Way, and welcome to Woody's Weekly Wisdom episode number 15. Gee, they are racking up. And look, this week we're going to go into a dive of the property market, a little less doom and gloom and a little bit more educational, I guess, in terms of this particular weekly wisdom. So staying away from the doom and gloom a little bit. There's a touch of it in this article. But really hopeful that there's some good lessons to be learned for people that are in the property market right now. So the headline, brutal reality, which obviously is where the fear comes in. Brutal is, again, using those emotive words to get you in. So brutal reality lesson for home sellers and buyers. And that's why this one is particularly interesting, because it applies to both the buyer and the seller. And basically, this is looking at a TV show here in Australia, the renovation show, and I don't watch it, so I'm struggling to quickly find the name of it again. But anyway, we'll get to that. And it's a show where a crew go in and do a makeover and then put the property up for sale. And effectively, one of the crew is discussing what they're noticing with properties here in Australia that they're renovating and then are going up for sale. And so the reason why I wanted to tackle this one today is that if you listen to the media at all, and it's hard not to hear it at some point during the day, you will have heard a lot in the last few weeks in particular of the headlines that the property market, the falls in the property market have stalled or finished or ended, or there's this return to rising property markets, and there's a lot of hype around that the property market's not going to crash and that prices are not falling anymore, they're starting to rise. And so there's all this supposed positivity around the stock markets. And this is an unusual one for the media, because obviously the media are much more excited about selling a doom and gloom story than they are a positive one. But because of some, let's call it, quirks in the property market in Australia in particular, in the first quarter of the year, where we actually saw prices increase in most capital cities. And so that led to the media jumping on the bandwagon and saying, the crash, it's not going to happen. It's falling prices that we saw at the end of last year. They're finished, they're gone, they're done. Well, this article kind of smashes that on the head a little bit. And not only does it kind of paint a different picture, it also paints a picture of what I've been talking about, of what's coming and yet to happen in the property market. And I still think we've got a good 12 to 18 months where we're going to be in this scenario that I'm about to talk to you about. So these guys have gone in, they've been doing renovations and improving the homes that are then getting put up for sale, revamped properties. And what they're seeing is that they're selling below expectation, despite having had designer renovations. So that's interesting in a couple of facts. One is you go in, in this case, you're not necessarily spending the money, the TV show's doing it, but if you're in the process of doing some renovations to a place and you've got an expectation of what that renovation is going to enable you to generate, what we're finding in the property market is that uplift or that expectation is not being met. And that will be because of a number of factors that we'll go into shortly. So, Selling Houses Australia, there it is, that's the name of the show, has basically seen or is saying that a decline in housing values and demand has led to a challenging season for the TV show in 2023. And there's the important "and" part. It's the demand. So what the little quirk that we saw in the first quarter in property prices rising was because there was so little properties being put up for sale compared to historical levels, previous quarter, same quarter last year. All the metrics that we use showed that the number of properties being sold in the first quarter was less. And when there's a lower supply, that means people are fighting over less properties, which keeps the prices artificially high. Now you might say, but that's contrary to what you just said about these expectations. And that is the difference. One is what's actually happening, the other is the expectation. And what you're finding is that people probably haven't quite yet adjusted to the new market. And so, 12 months ago, if you did a renovation to your property and prices were running quickly, a renovation just added massive value and you had this high expectation of what you could achieve. And in most cases, you could, because there were so many buyers in the market and they were snapping up, in pretty much case of FOMO. Anything that came on the market was getting snapped up at high prices, and so it was hitting expectations and exceeding expectations. Again, not necessarily value and not necessarily increasing in prices is what I'm talking about. I'm talking about expectations, people's expectations. What we're seeing in 2023 is those expectations haven't yet lowered to where the market is now at because of, and this article goes on to talk about these things like, obviously, the increase in interest rates and inflation. And what those two things have done is reduce people's borrowing capacity and also their confidence. And we know the property market is a huge, confidence is a huge factor in the property market. So with less confidence, less borrowing capacity, rising costs, rising interest rates, that has meant that prices are going to start to soften. There's no two ways about it. Prices have to soften as a result of those factors. And so the expectations are up here, but the capacity to pay is starting to fall and is down here. And that's resulting in this gap between the expectation and what's actually being achieved. And so this article suggests that Selling Houses Australia as a TV program is effectively a market barometer of what's going on in the market. It's effectively telling you what's happening when people are not prepared to pay those premium prices for a renovated property. Now, that doesn't necessarily mean that you're getting a bargain. It just means that it's not getting to the seller's expectations because, like I said, they haven't adjusted their expectations based on all the other factors. They're still kind of thinking back to what was happening last year and thinking, well, if that's what I got last year, I've got to get that plus some more because I renovated it this year. Well, that's not what's happening because of the rising interest rates, the rising cost of living, the reduced borrowing capacity, tighter lending conditions, all those types of things are causing the price or the ability to pay higher prices to reduce. Now, in terms of my comment before about 12 to 18 months more of this, we still haven't seen all those people that are on fixed interest rates. They haven't all merged over back to variable rates yet. So there's going to be a whole bunch of other people feeling some pain soon that, again, undoubtedly will lead to some forced sales. And that when we're in a forced sales market, there is people taking prices of whatever they can get in order to get out of a mortgage prison that they can't afford. And so this article continues on and talks about some of the other factors going on here, and that is that when the market is really positive and buoyant, the early offers that come in from buyers are often the best. But then it also goes on to say, when the market's gloomy and the offers are more gloomy, the early offers are often the best. And what we're seeing is that our sellers are hanging out, waiting, that expectation gap. They're waiting for the higher offer and it's not coming. And the longer a property sits on the market, the more people question why and therefore are less likely to pay above market rates and above expectations. And so this article is kind of encouraging people to take those early offers. So, if an offer comes in, it might be below your expectation, but it's probably going to be the best offer you're going to get because those early offers often prove to be the best. And so this article, I find, as I said, it's not as doom and gloom in terms of trying to scare people, but it is very educational in that it's saying that even this TV show is a bit of a market barometer of what's going on. It's telling us that there is a gap between seller's expectation and buyer's capability or capacity or willingness to pay for what's out there on the market right now. And with only a small amount of supply, that in the first quarter kind of masked what was going on. As more supply comes on, as more people are forced into selling because of their scenario with interest rates, there's going to be less of that demand pressure or demand and supply pressure, and we're going to see more of these prices starting to soften. And that, I think, is when we'll get a better appreciation that the property market hasn't bottomed and there is more declines to be had. Now, as a wealth coach, what that tells me is, once again, it just spells opportunity. We're now in the next, 12 to 18 months, we're going to see the Boxing Day sales that I often talk about and joke about happening in the stock market. We're going to start to see those Boxing Day sales in the property market. And whilst this is, I guess, a natural occurrence, an unfortunate one, but it's a natural thing in life. One person's pain can be another person's gain. And so if you're positioned to be a buyer in the 12 to 18 months, you won't have to rush as an investment property in particular. And that's what we're talking about, buying investment grade properties. If you're an investor, you won't have to rush. You won't have to feel like if you miss out on one, that's the end of the game. There will be others. And there's time to do what I consider considered buying in the right markets and getting something at a really good price, great value, without having to outbid everybody up the chain to get something because you're desperate. You won't need to be desperate to get into this market as an investor, and you'll be picking up some of those Boxing Day bargains. And in 5 and 10 years' time, you'll be a very happy and wealthy investor. And if you want to learn how to do property investing and how to be on the right side of that equation and grow your portfolio efficiently and effectively, reach out, leave me a comment down below, send me a DM, get in touch, and let's have a chat and see if you're in a position for us to be able to help you. If we're a good fit for each other, we'd love to help you. So leave us a comment down below or send us a DM, and we'll send you something to organise a chat. We'll send you something for free as well, just for reaching out. And hopefully we can help you and guide you on your path to a secure financial future. So that's Woody's Weekly Wisdom, episode 15. You try and say that 3 times quickly. That's it for this week. I hope you found that useful. A little less doom and gloom, a little bit more educational, and once again, a good deep dive into what's being talked about in the media when it comes to property. And just be mindful of the difference between the doom and gloom headlines and some of the more informative ones. Like I say, don't get your educational material from the media, but if you're forced to consume it in some way, just be mindful of what you're reading and be able to pick it apart a little bit to get the lessons and grow your wealth effectively. And like I said, reach out if you want us to be a part of that journey. Have a great week. We'll see you again next week. Cheers.